look at your mortgage needs, we're going to choose a program based on the criteria that fits you best. In an FHA mortgage, which is federally backed, you must use it as your primary residence. An FHA program is commonly used for first-time home buyers. However, it may or may not be the best program based on your scenario. The Federal Housing Administration, or FHA, has put a list together of requirements in order for them to back a loan. However, because the FHA doesn't actually lend money, the mortgage lenders that utilize FHA loans also have requirements that are called overlays. These are requirements that are above and beyond the FHA minimums in order to fund and finance your loan. Two very straightforward FHA requirements are, if you have a credit score between 500 and 579, you're required to put 10% down. Now, if you have a credit score higher than 580, an FHA program requires you to put a minimum of 3.5% as a down payment. But for a mortgage lender to accept your loan, they might have a credit score requirement of 620 or higher. And that's going to vary between mortgage lenders. And then another requirement for an FHA loan is an upfront mortgage insurance premium amount of 1.75% of the loan amount. But don't fret, that can be added into the financing and not required to be paid up front. Another important aspect about an FHA mortgage is your mortgage insurance. If you decide to put 10% down on an FHA loan, you'll have mortgage insurance for the first 10 years of the mortgage, and then on year 11, it will fall off or be eliminated. However, if you decide to put the minimum down, which is 3.5%, you will have mortgage insurance throughout the life of your loan. But once you have a certain amount of equity in your home, we'll look at refinancing you into a program where you can eliminate your mortgage insurance completely. When calculating your mortgage insurance on an FHA program, it's a fixed rate. And on March 20th of 2023, the Federal Housing Administration reduced the requirements from mortgage insurance from 0.85% to 0.55% if you're putting the minimum amount down. And then if you're utilizing 5 to 10% as a down payment, they've reduced the mortgage insurance to 0.5%. In an effort to make it real for you using concrete numbers, the current maximum FHA loan value in a non-high balance area is $472,030. That being said, prior to March 20th, 2023, your mortgage insurance would have been $331.88. However, with the mortgage insurance reduction to 0.55%, your mortgage insurance would have been reduced to a monthly amount of $214.75, ultimately saving you $117.13 every single month. Now, depending on where you're at in the country, you're going to have different loan limits based on location as well as number of units. In an FHA program that's used as your primary residence, you can purchase a property up to 4 units. And based on the number of units, you're going to have a different maximum loan amount. And then finally, if you have a friend or family member in an FHA mortgage, you can pass on this knowledge to them in an effort to save them some money. If they have been in an FHA mortgage prior to March 20th of 2023, the new reduction in mortgage insurance can save them a significant amount of money by refinancing. But if you're considering refinancing your FHA mortgage, it is a requirement that we save you at least 0.5% in interest rate compared to where you're at now. If you'd like to see how much you can save, feel free to reach out to me and I'll get you a live quote. If you look below, I've also included a link to my mortgage checklist for the documents that would be required to get you approved for your mortgage. My whole focus as a mortgage advisor is to educate and prepare prospective homeowners to save as much as you can. So if you like this video, do me a favor and share it with someone you know.